Welcome to the Coin Bureau Weekly Crypto Review. Here are this week's top headlines in the crypto news. Taiwan Troubles. China begins to cut ties with the United States and others following the visit of a high-ranking US politician to Taiwan. Why this could be very bad for the crypto market. Ethereum Angst. As Ethereum's transition to proof-of-stake approaches, a prominent miner is calling on fellow miners to fork crypto's largest smart contract blockchain. What could this mean for ETH? Stablecoin Excitement. USDT's market cap grows for the first time in months, while Binance's CEO speculates that billions of dollars are waiting to buy. When could the buying begin? All eyes on exchanges. Binance gets wonky with WazirX, Binance US delists AMP, Coinbase partners with BlackRock, and a staffer confirms US exchanges are under scrutiny. Everything you need to know. Hacks and attacks. The Nomad cross-chain bridge is hacked for nearly $200 million, and 10,000 Solana users lose their funds in a wallet exploit. How did this all happen? Instagram NFTs. The Flow token flies after Instagram begins beta testing its blockchain and expands its NFT integration to 100 countries. Which other cryptocurrencies is Instagram leveraging for NFTs? And a closer look at last week's top-performing cryptos and where they're headed next. All this and more in just a moment. Good morning, afternoon, or evening. Thank you for tuning in. My name is Guy, and what you're about to see is educational content, not financial advice. You can find any topics you're looking for using the timestamps in the video timeline. And now for today's top stories. Last week, House of Representatives Speaker Nancy Pelosi traveled to Taiwan. For those who don't know, Nancy is the third most powerful politician in the United States, and she is the most prominent US politician to travel to Taiwan since the mid-90s. This is significant because since the late 1970s, the United States has adhered to a One China policy, which essentially involves not officially recognizing Taiwan as a country, in order to stay on friendly terms with China, which sees Taiwan as being part of the mainland. It should come as no surprise then that the Chinese government was not too happy when it heard that one of the most powerful politicians in the United States was planning on visiting Taiwan, a move which is interpreted by the CCP as explicit support for Taiwan's independence. News of Nancy arriving in the island country caused markets to crash due to the uncertainty around how China would react. Luckily, nothing much besides some saber rattling really happened, and the markets promptly recovered on the news that Nancy had left just a couple of days later. Unfortunately, the effects of Nancy's visit are still being felt in other ways, as China is now reportedly engaged in drills which could escalate into a de facto blockade, meaning it's becoming more difficult and could soon become impossible to move goods in and out of Taiwan. This is concerning because Taiwan makes 92% of the world's semiconductors, which includes microchips. In case you haven't noticed, microchips are in literally everything from your fridge to your phone. If Taiwan's trade with the world is reduced or even cut off, it could disrupt just about everything, which is why I'll be doing a deep dive into the exact implications these and other scenarios could have for crypto and the economy as a whole later this week. I can tell you right now that this could cause inflation to go through the roof, which would force central banks to continue raising interest rates to fight this inflation from the demand side. This would do even more damage to the economy, since most of the inflation would be coming from the supply side. Some would say this is already the case today, with inflation continuing to hit record highs in many countries. This has resulted in record levels of consumer debt as people try to keep up with the cost of living, and in the United States, household debt just hit a record high of $16 trillion. When you add rising interest rates into the mix, it's unlikely that everyone will be able to meet their debt obligations, even after they're done selling off all the assets they own, including their crypto. This could potentially lead to a deep recession that rivals the Great Depression of almost 100 years ago. If inflation is already hitting you hard, I strongly suggest watching our recent video about how to beat inflation, because at this rate, it looks like it could stick around for quite some time and might get worse as winter approaches. Link to that video will be in the description. Now, in crypto-related news, a prominent Ethereum miner is looking to fork the Ethereum blockchain when it transitions from proof of work to proof of stake. Obviously, this transition will put Ethereum miners out of business, hence why some of them have been critical of the merge in recent months. In the case of this Ethereum miner, however, the threat of an Ethereum fork seems to hold some water. That's because Chandler Guo was involved in forking Ethereum back in 2016 to create Ethereum Classic, whose ETC coin has recently been rallying on the assumption that the Ethereum Classic chain will receive Ethereum's miners. Well, it looks like this is becoming less and less likely, as Chandler has been explicit in his intentions to create a new fork of Ethereum and boldly proclaimed on Twitter that, quote, "I forked Ethereum once, I will fork it again." If you need more evidence that this is no joke, consider that 3 cryptocurrency exchanges have directly or indirectly signaled their support for Ethereum's proof-of-work fork so far, including Huobi Global, which is one of the largest exchanges out there. Now, it's not entirely clear why Chandler wants to fork Ethereum. Although he claims it's because proof-of-work is better, Ethereum already has a proof-of-work-based version, which is, of course, Ethereum Classic. And Ethereum creator Vitalik Buterin has even encouraged disgruntled miners to move there. This suggests that the real reason why Chandler wants to fork Ethereum is for quick cash, something which Vitalik believes and something which Chandler's own tweets seem to support. Now, to clarify, if Ethereum forks and you hold ETH in your wallet, you will get a copy of that ETH on the new chain. This prospect of easy profit, combined with the apparent support of some Grade A exchanges, might have actually contributed to ETH's impressive rally last week, though I suspect this has more to do with the last Ethereum merge testnet, which should be happening at any moment now. This begs the question of what an Ethereum fork could mean for actual ETH, and I suppose I just answered that question. It will increase the volatility of ETH's price as the merge approaches, presumably to the upside as people accumulate ETH to get free ETH on the new blockchain. Beyond that, it's anyone's guess, and Vitalik's guess is that the fork which receives the support of centralized stablecoin issuers will be the most successful, because stablecoins are how most of the money comes in and out of crypto. There are also strong demand drivers for smart contract cryptos like Ethereum. Now, as far as I know, none of the stablecoin issuers have announced support for any upcoming Ethereum forks, though Chandler implied in a recent retweet that Tether might be the first. Even so, Tether will likely keep most of its liquidity on more secure smart contract cryptocurrencies like Ethereum. Now, you can learn more about what Ethereum has been up to and what the merge could mean for ETH using the link in the description. And speaking of stablecoins, it looks like the market cap of Tether's USDT has finally started to grow after being gutted by the uncertainty around stablecoins following the collapse of Terra's UST in early May. It looks like most of this USDT was minted in a single swoop, as per whale alerts on-chain analysis, which detected a 1 billion USDT print. Tether CTO Paolo Arduino replied to the tweet saying the company was just, quote, replenishing inventory on Tron, which seems to be what he says every time this happens. To be fair, the fact of the matter is that the demand for stablecoins rises significantly when the crypto market is volatile. This is for reasons related to futures trading that I won't get into here, but the main takeaway is that no, stablecoin prints do not result in crypto market pumps, as many seem to believe. Instead, an increase in stablecoin supply is a signal that the interest in cryptocurrency is increasing, either because the market is pumping or dumping. In this case, it's because the crypto market is pumping. As to why so much USDT was minted to Tron, it might have something to do with the fact that Tron is a popular network for transferring USDT due to its near-zero fees, so much so that the recent 1 billion mint makes Tron the most popular blockchain for USDT. Interesting, to say the least. Now, you should know that it's not only USDT's market cap that's been increasing lately. The supply of Binance's BUSD stablecoin has also been steadily increasing since the crypto market started its recovery rally last month. This increase in stablecoin supply seems to have caught the attention of Binance CEO Changpeng Zhao because he recently pointed out that the total stablecoin market cap is around 140 billion, and that this represents how much money is waiting to buy coins and tokens at the right time. While it's unlikely that all this money is in fact waiting to buy the dip, given the crypto bear market, even a few $1 billion of deployment is enough to cause a pump. This pump causes speculation, which in turn causes more cash to flood into crypto via stablecoins, leading to massive stablecoin prints. This is the dynamic we seem to be seeing now, and though there has been some dip buying, I have a feeling that the real buying pressure is still building up and could be released later this week, assuming Ethereum's final merge testnet goes smoothly and the inflation figures for July come in cold. Now, if you're wondering why the next CPI print is so important for crypto's price action, check out our recent video about the Federal Reserve's interest rate plans. That will be in the description. Anyways, CZ's stablecoin comments aren't the only reasons why Binance has been making the headlines lately. After Indian authorities froze $8 million belonging to WazirX as part of a money laundering investigation, CZ tweeted that Binance's 2019 acquisition of the Indian crypto exchange fell through, and that Binance only provides tech solutions for WazirX's core operations. All the while, WazirX founder Nishal Shetty has been arguing that Binance does own WazirX and pointed to CZ's comments that Binance has the power to shut down WazirX if it wants. CZ fired back by saying Nishal is playing word games and that they don't have access to the trading systems. Now, the dispute comes at a time when Indian officials are calling for the immediate ban of cryptocurrency in the country to prepare for the rollout of its digital rupee, which is set to occur later this year or early next year. A playbook we've seen before, and one we're likely to see again as CBDCs pop up elsewhere. In what is likely to be a bid to avoid regulatory scrutiny in the United States, Binance US became the first US exchange to delist the AMP token, which you'll know is one of the 9 cryptocurrencies the SEC labeled as security in its recent complaint against a Coinbase employee who allegedly engaged in insider trading. If you watched our recent video about the SEC's enforcement hearing, you'll know that anti-crypto politicians are pushing the regulator to crack down on crypto exchanges that listed XRP in the past, a cryptocurrency that the SEC also considers to be a security. As such, the delisting of AMP by Binance US is a protective measure against such scrutiny from the SEC, and it's possible that we will see it and other exchanges delist all the cryptocurrencies that the SEC recently labeled as securities. That said, it's more likely that the SEC will opt to go after the crypto exchanges themselves rather than individual crypto projects, and it looks like this is exactly what's happening. According to a staffer, aka assistant, to pro-crypto politician Cynthia Lummis, every US crypto exchange is now under investigation. For what it's worth, it looks like Coinbase might be safe from the SEC's scrutiny, or at least be dealt a lesser punishment now that it has signed a deal with the devil, aka BlackRock, which will make it possible for BlackRock's clients to invest in cryptocurrency, starting with BTC. If you watched our video about BlackRock, you'll know it's the largest asset manager in the world, with around $10 trillion in assets under management, and that most of Wall Street uses BlackRock's market analysis platform Aladdin as part of their operations. This is why the news has been met with mixed reviews. On the one hand, BlackRock's involvement means trillions of dollars could eventually flow into crypto. On the other hand, BlackRock's platform could acquire enough coins and tokens to take control of certain proof-of-stake cryptocurrencies and DeFi protocols. Then again, BlackRock's clientele might not be too keen on investing in crypto projects and protocols that keep getting hacked, and the latest to fall prey was a cross-chain bridge called Nomad, which saw $190 million of crypto drained in what some are calling the first decentralized bank robbery. This is because after the exploiter stole some crypto, hundreds of onlookers started copying and pasting the code to join in on the exploit, some of whom were apparently white hat hackers trying to cop the crypto before the copycats, so it could be returned to its rightful owners when the attack was over. Nomad has since offered a $20 million bounty to anyone who returns the exploited crypto, and it looks like some onlookers and white hats have taken the Nomad team up on their offer. Blockchain analytics firm Chainalysis seems to have taken the chaos as an opportunity to push a blog post detailing the more than $2 billion of crypto that's been lost in cross-chain hacks this year. That's right, in the first 8 months of 2022, $2 billion in crypto has been lost because of cross-chain hacks. Note that this figure doesn't include all the other crypto exploits we've seen, and last week the Solana ecosystem experienced one such exploit when the seed phrases used to create Solana wallets via the Slope wallet managed to leak because said seed phrases were being kept in a centralized manner. This exploit is estimated to have affected around 10,000 Solana wallets, which included any Solana wallet that was created using a seed phrase that had been generated by the Slope wallet. This is why many phantom wallets were affected as well. The affected wallets had been originally created using Slope. In total, around $5 million of SOL and SPL tokens were lost, and the slip-up has since prompted the Slope wallet to offer a $500,000 bounty if the crypto is returned, and even offered not to press criminal charges if the crypto is returned within 24 hours. To my knowledge, there was no response. Now, what makes the Slope wallet exploit so significant is that nobody really knew what was going on for the first day or two. There was lots of speculation that the Solana blockchain itself was to blame, which was understandable given how many outages it has faced over the last year or so. Despite this barrage of bad press, however, FTX founder Sam Bankman-Fried is still bullish on SOL and recently argued that it's underrated, i.e. undervalued, relative to other smart contract cryptocurrencies due to said bad press, which Sam says is deserved but understandable given Solana's pace of innovation. As crazy as this sounds, the chart suggests that Sam is onto something. SOL looks like it could rally in the coming weeks, assuming the rest of the crypto market moves. I'll be doing another Solana update soon enough, and while you wait, you can check out my most recent update about the project using the link in the description. Anyhow, another cryptocurrency that's been making the headlines lately is the Flow blockchain, built by CryptoKitties creator Dapper Labs. This is because Instagram began rolling out its NFT functionality on Flow, which caused the Flow coin to explode. Note that this explosion is speculation, at least for now. In the long term, Flow's Instagram integration could have profound effects on its crypto coin, especially since the Flow blockchain was built from the ground up for NFTs. Flow has also been focused on mainstream rather than crypto adoption, which is why the project has flown a little under the radar. The only caveat is that Flow isn't the only cryptocurrency that Instagram is leveraging for its NFT functionality. Instagram is also exploring NFTs on Solana, Ethereum, and Polygon, one of Ethereum's most popular scaling solutions. Now, if you watched our recent video about Polygon, you'll know that Instagram's NFT integration is just the tip of the iceberg over at Meta, as the company is planning on rolling out NFTs for Facebook too. If you ask me, it's unlikely that any single crypto blockchain will be able to support Facebook and Instagram's combined 4.5 billion users. There's simply no cryptocurrency that's scalable enough for this, and that means that Solana, Ethereum, Polygon, and Flow will probably share the load. Logically, this means that Sol, ETH, Matic, and Flow could all see astronomical price action in the coming months and years, and it's possible, if not likely, that other smart contract cryptocurrencies will be brought on board, especially if these four can't collectively handle the user load. Just bear in mind that the SEC is in the process of clamping down on crypto projects, and the only one that seems to be safe is Bitcoin, which of course doesn't support NFTs. Tech giants like Meta have also been seeing their fair share of regulatory scrutiny and have been targeted over their crypto aspirations in the past. Regardless, the continued progress of Instagram's NFT integration is a significant milestone for the crypto industry, and I'm sure it's just one of many bullish announcements we're going to see between now and the next crypto bull market. If you're wondering when the current crypto bear market will end, you can find out using the link in the description. Turning to the charts, BTC has continued to trade sideways on the daily, which is expected given the aforementioned upcoming CPI print, which will ultimately determine whether crypto continues to pump or if it sees a big old dump. If you pulled up BTC's weekly chart, however, you can see that it's still fairly oversold, and BTC's fair value is somewhere around 30k, according to the Bollinger Band and RSI indicators. In other words, there's still lots of room for more upside in the coming weeks, and this is the case for most cryptocurrencies. And with that, I bring you last week's top-performing cryptocurrencies, which were Decred, Flow, the Trust Wallet token, Quant Network, and Chiliz. Spicy combination. So, starting with Decred, its DCR coin appears to be rallying on the news of an upcoming upgrade, though I must admit that DCR's price action looks incredibly suspicious, so much so that I can't really speculate on where it'll go next. Next up, we have Flow, which I just covered, and you'll hopefully recall that the Flow coin is rallying on the news of that NFT integration for Instagram. Flow seems to be a bit overbought on the daily and is approaching these levels on the weekly. This suggests we could see a continued pullback in the coming days before moving higher, at which point Flow could rally up to test the $4 level. Then there's the Trust Wallet token, which appears to be rallying because of a social media competition for 10 titanium seed phrase storage tags hosted by the crypto wallet. Did I mention that we sell these at the Coin Bureau merch store too? Link in the description. Now, what's odd is that the TWT token seems to have defied the recent crypto market crash and continues to be in a long-term uptrend. I'm honestly not that familiar with TWT's tokenomics, but I suspect there's a burn mechanism involved. If you know, let me know in the comments below. As for Quant Network, I couldn't pin down what was causing the QNT token to pump. I also couldn't help but notice that Quant Network has had comments off on its tweets for a while now, and I can't say I know why. So, if you know, also let me know in the comments below. Like Flow, QNT is looking overbought on the daily, but it tells a different story on the weekly. What you see here is more or less what I expect most cryptocurrencies to do in the coming weeks: retest and exceed that fair value level based on Bollinger Bands and the RSI. QNT could be the first mover. And last but not least, we have Chiliz, whose CHZ token is rallying on the news that a South African rugby team has partnered with Socios, the sports token platform that's powered by Chiliz. Like Flow and QNT, CHZ is in overbought territory and should see a slight correction in the coming days. If crypto's recovery rally continues, however, CHZ could pull close to a 2x from its current price point. You can learn more about Chiliz using the link in the description if you're interested. And that is all for today's Coin Bureau weekly crypto review. If you enjoyed it, you know what to do. Like button, subscribe button, and bell icon too. If you're looking to maximize your gains during the bear market, the Coin Bureau deals page is where you should go. You can find the link to that resource and many others in the description below. Thank you so much for watching, and I'll see you all in next week's episode.